Okay, so a new Darwin X running. The old one just had too much drawdown. The score was affected too much. It was easy just to move on. So this is running a far lower risk profile. And to be fair, it's running still loads of diversification within it too. So we'll just see how that goes. Obviously, within, I think, 2 or 3 months, we'd got funded. We'd got 80K. I can repeat that very, very quickly, but I'm going to get a few more Darwin X's and, 12 months from now, 2 or 3 accounts. That would be nice. I've shared this account a lot, AUD-CAD, the one that doesn't really enter any trades. There's nothing open. It's a very slow and steady set with high delay, high live delay, but you can't really argue with this level of consistency. 3%, 5%, 6%, and then Jan, Feb, March. So yeah, we'll see what April brings, but a nice solid approach for between 2.8, 4% a month on a funded account, or even a cent account. The risk profile could be increased here. This is the whole beauty of running all these accounts, is I can funnel them in, I can increase the risk, decrease the risk, wait for some to have drawdown, then bulk copy the positions. There's so many different ways I can use and leverage these accounts for various different jobs this is like my toolbox. And if I've got that job over there, I can use that tool, I can use that tool, I can use them all, or I might just need one. It enables me to make data-driven decisions from a lot of time in the live market, because I've earned the right for those decisions to be easy when I've got this amount of data over this amount of time. This one's gold. It only runs a 0.3 fixed lot size. This is one I've said as ran, or probably was back tested from 2021 maybe, because it's been a set I've used for quite a while. And yes, it has the odd moment, but they're few and far between. So if we look at 2023, October, November, December, again, look, 2 to 3%. It's steady, but again, I can increase the risk, or I can add it to a funded account. Still solid. This is the hour 4, 5 minute double confluence trend strategy. So despite me having some sets that were caught on the gold move in the wrong way, this has just been buying in an uptrend. Just been buying, uptrend, 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 but only when the movement on the 5 minute time frame supported the trend on the 4 hour time frame. So it had to wait for some movement to the upside on the 5 minute with a bit of force to it, with a bit of trend, with a bit of momentum to match the 4 hour. You can see here, look, buys. So that's since 26th of February. The last sells were the 15th of February. So if you want to have a look at the charts, that will support how gold's been moving. So again, consistent 5%, 5%, 5%, 2.97, 5.8, 3.88. See what April brings. But again, it's a fixed lot. There's no martingale. It will stack some positions as and when it needs to. But yeah, such a nice double confluence strategy. It's nice to see so many of you replicating that. And to be fair, this is a double confluence on trending. It makes sense on a ranging market too, by basically confirming, hey, is the overall market on a higher time frame? Call it 1 hour, 4 hour ranging. Is the lower time frame doing the same thing? Great. Let's get in. Probably doesn't make as much sense on an against trend strategy. But hey, if you can stack these confluences in a few different ways, it will just reduce the likelihood of you getting tagged in a reversal. Because if I'm not in anything now and gold reverses, I won't be buying. It'll only sell when the whole trend changes and it's still going down on a lower time frame. I can't get caught otherwise. The only way I can get caught is if I'm in a position already. And again, I'm only in a position already if it's going up on the 4 hour and going up with momentum on the 5 minute. So I'm basically, if you look at stacking the cards in your favor, there are a few more cards that are stacked our way. You just got to accept that perfection doesn't exist. All of your back tests are no guarantee or assurance of future results. Sometimes you will get outliers, you will get things that don't play out in the market. And that's why running things like this and maximizing your licenses is key. Here's one that I've not shared with you before because I forgot about it. I've got 7 or 8 VPSs. This has just been running. It's had moments of biggish drawdown. And it's just something that hedges and averages across major pairs. It's not something that you'd be able to really replicate on a funded account because it's always carrying drawdown. And it's just that A, you're always in drawdown, and B, that drawdown would probably be too high. But for like a funded account, the hedging and averaging style strategies, you can't really backtest, because every minute or every 5 minutes, you're probably going to be in a different stack of trades until they sync and stuff. So there are a few more variables. Whereas when you've got a few confluences like the previous gold one, and it has specific entry criteria, it's far less of an issue. But if trades can open every few seconds just anyway, then it really makes it more difficult. You can do it, and then you can robust check it in the. So what I mean by that is you could run a back test. You can do this anyway. You get a result based on, let's say, testing from January last year to now, and you get X. Well, there's nothing stopping you taking that set, checking it from the 1st of February, 1st of March, 1st of April, 1st of May, mid-March, mid-June, and just checking that, hey, this is still consistent. Because with like hedging and averaging or strict martingale, there are things that could have formed, the sequences of trades might have opened in a completely different way, which would have rendered your backtest less reliable. So those things are just, that's why Monte Carlo simulation is a thing. You can take all of that data, juggle it all up, and you're going to get, you know, a range or a spectrum of different results sometimes. Yeah. This isn't martingale. This is a fixed lot. Okay. Everything's fixed lot when it loads. I thought my Wi-Fi had gone then. I was panicking. Let's refresh. Here we go. Fixed lot. There's so much data, it's probably not loading. There we go. All fixed lot. So if you look at 2023, this has been running since January. To be fair, because it's been fixed lot from the initial 100K that this account started at, it's not compounding. That's what happens when you sort of see the bigger performance at the front end, and then it's just gone down because the balance has got bigger and the lot sizes hasn't gone up in proportion. So I will probably raise this up again and just increase it. But as you can see here, look, this is a good 15, 16, 12, 14 months of performance on 7,214 trades, 19% drawdown right now. But even if you close that, even if I close this down and reset it right now, which to be fair is something that I'm going to replicate and try on another account, because if I was to close that down at the end of every week, for example, I might find that it improves the overall result, because you're going to be banking more quickly from the fresh sequence. So you're taking a loss, but to quickly recover it, whereas sometimes your drawdown might be open for longer without doing that. So I can see pros and cons of that, but without having the data, it's just an opinion and something that may or may not work. But yeah, if I close everything out now, that would be 567,000. If you were trading this on a cent account, you're still 467,000 up. You're still 5x'd an account in 15 months, which would all take those returns over that period. NZD, CHF, AUD, CAD, set files have been in the drive for a long time. This has slowed up quite a bit in terms of how the market, well, I guess not that much really. 1.4, 2.6, 1.82, 1%-ish. Not a lot really. Shows I could increase the lot sizes if I was copying this, or a slow and steady funded account. PalCopy, this master account is just an absolute beast. It's running 3 sets, AUD, CAD, GU, EU. Again, they're in the drive, some of these. They might have been slightly adjusted, but not a lot. So this is copying over to the copy trader. It's not copying all positions, as I've explained before on a previous call, because the lot size has to match. So it might only copy from trade 3 or 4, for example. 2.56, 3.5, 4%, 4%, 2.2. This has had I think it's 1.8% drawdown, and yet we've still achieved 18% there. The Vantage Copy Trader, just under 10% up, 9%, which, considering we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15-ish trading days, I think that's pretty good. This is outperforming the previous cent account by 2x at least. Previous cent account package copier was doing 2 to 3% a month. So it's massively outperformed it, and the drawdown has been really minimal so far as well. So if you're not involved in this, the link's in the Discord channel. Get a Vantage account or PU account. If you've only got one, look at doing 2. And we only make money when you make money. in terms of the profit split. So that works too, as opposed to, if someone's putting 1,000 in and it made 4% and you've got a $34.99 subscription, and that didn't make a lot of sense, which is why we built that buffer of the 90 days. But now we've switched it to the 20%. It doesn't really matter, because if you've only made 40 quid, you're not paying us a lot. And if you are, then we should be able to remunerate off the back of that too. So that is the account run through.